What they did was they created an institution that went to these banking institutions. They went there and they collected all the information on everyone that they ever loaned money. And these institutions became Experian, Equifax. These became your consumer reporting agencies. So your consumer reporting agencies. And they started creating information or creating documents on people. Now, in the beginning, ladies and gentlemen, it did not matter what type of information was being reported on who. They were furnishing information about your love life, about your bank account, about if you cheated or not, about medical histories, health, like the information that was being disseminated from these agencies in the beginning, it was unregulated. It was unregulated. So what do you think the purpose of the FCRA, FDCPA, Equal Credit Opportunity Act? What do you think the purpose of these laws were put in place for? Can anybody guess and tell me why these laws were created after these industries were created? Why?
For regulation, because they needed to keep track and they needed to make sure that they were adhered to.
Yes, Tinkerbell, you are 1,000,000% accurate. See, the creation of those industries created new laws. We have the FCRA. We have the FDCPA. We have the Equal Credit Opportunity Act. We have the Truth in Lending. Right? So these laws opened up the gateway for CRED. This thing opened up the industry for credit repair organizations, right? So there needed to be another law to regulate them. And this law is called CROA, Credit Repair Organization Act, right? So as you can see, ladies and gentlemen, every time a new industry was created, they have to create the laws after to regulate. Can anybody tell me why CROA was created, Credit Repair Organizations Act?
Because they needed to make sure that they, again, laws were not being violated, everything was being kept under wraps, and that other institutions were not, that were adhering, to the new regulations for the process.
Because you had some credit repair business owners out there, they were using the most fraudulent tactics to fraud not only people, but other institutions as well. So they had to, like, there were people calling themselves credit repair businesses that just took clients' money and never did any work. Can you imagine paying someone to do something for you only to find out that the phone number or the email does not work anymore? It was ridiculous. And a lot of that happened. So they had to put in place a law called CROA, which is Credit Repair Organization Act, to regulate the credit repair organizations. It was a messy game. So the FCRA's purpose, right, is accuracy and fairness of the credit reporting. So remember earlier in the example, I told you that because these entities notice a market for information, they created their own organization, right? And in the Fair Credit Reporting Act, you will see right here where it says number 2, an elaborate mechanism has been developed for investigating and evaluating the creditworthiness, credit standing, credit capacity, character, and general reputation of consumers. As you guys can see, as they move from fractional reserve lending, as they move from the gold and silver certificates, they found out that information was needed on borrowers about their borrowing histories. TransUnion, Equifax, and Experian, they spearheaded this industry. And right after TransUnion spearheaded this industry, can anyone guess what came next? I know we spoke about the credit repair business owners, but there was something else that came right in here. What their main function was the information on the credit report. Can anybody tell me who or what that was? Who was it?
The CFPB?
Not the CFPB, not yet.
FTC?
Not yet. Starts with an F.
FCRA.
Ends with an O.
That's already.
Statute disputing.
End with an O.
Yep.
Oh, FICO score?
FICO.
Oh, FICO.
FICO came in because FICO said, if it's so, can you imagine, Karen, what's the most pages you've seen on a credit report? How many pages?
I have 353 and I have a client that has 521.
Can you imagine a lender going through so many pages to decide if they're going to lend to you or not? You'll never get approved. So what FICO did was they came up with an what? An algo. It's a slang for algorithm. Us nerd guys in the tech world, we call it an algo, right? So they came up with an algo, and this algo took your information. So FICO came up with an algo, right? And remember, algo means algorithm, guys. They came up with an algorithm that would take a consumer report, right? So this is Daraine. They came up with an algo because this report is supposed to be a what? A reflection of me. So they came up with an algo that took Daraine's information and placed it in an algorithm, right? So this is a computer. Beep, beep. So they put it in there, and this would spit out what is called a FICO score. This FICO score now ranges from 300 to 850. 720 and above is ideal. Between 640 and 720, you're okay. Below that 640, not good. Right? So this is where most people fall. And they fall there by design, not by choice. Because this is where subprime lending occurs. Can anyone tell me why subprime lending is such a big market?
Because they cater to people that they know are in need of the money, and therefore they're willing to take a higher interest rate just to be able to have access to the funds.
Mm-hmm. Karen, you are so right. You see, because they know that most Americans are miseducated, And by design, ladies and gentlemen, it's black and brown communities. Whether you want to believe it, black, brown, Hispanic communities. It is designed this way. Don't say, oh, I know a Caucasian person and they got 500. Yeah, but what's the percentage of Caucasian people that have bad credit? It's not a lot. But they also knew that they engineered black and brown people in the 80s, in the 90s, in the 2000s. Everybody was glued to BET and hip hop, R&B. So they created a culture. They're going to tell you, oh, black people created R&B. No, we sang R&B. We didn't create the industry. The industry was created to sell to us. Remember, our favorite rappers, they would say, oh, they went into the dealership, duffel bag full of money, drove out with a Lamborghini, right? Drove out with an Escalade, right? So our favorite people that we saw, our NBA players, our actors, our singers, all had big houses, flashy cars, and everybody wanted to be like the Joneses. I remember I was dressing like Michael Jackson. I loved me some Michael Jackson. I was moonwalking. I was breakdancing. Y'all didn't know Daraine when I was in high school. Y'all don't, I can moonwalk. I can.
Oh, I want to see that in
Let me
Jamaica
see, let
along
me
with
see.
some karaoke, okay?
Let me see.
I can pop and lock it. I can moonwalk. I used to break dance. So that type of culture influenced the way I think. And I'm positive here. Everyone here, you were in love when Keisha Cole was in love. You had your heart broken when Keisha Cole's heart was broken all 15 times for the last 15 years. Y'all know what I'm talking about. Y'all know it. You was in love when Usher was saying, let it burn. Everybody was influenced by, y'all know this stuff is true. So they figured out that through television, television, they could influence a culture or a group of people into doing what they wanted to do. So your grandma told you credit was bad. Ooh, can I get a witness? Your grandma told you credit was bad.
Amen. Amen.
Your mom told you credit was bad. We don't talk about finances in the house. It's an adult thing. Let the adults talk about credit. And in doing so, we never learned proper money management. We never learned about the FICO system. We never learned how banks work. Because what? Most of us was too busy on food stamps, on EBT, on public housing and assistance. So we were never taught about money. It is by design. But now they told you, go to school, get a job. Well, we don't have money to pay for the school, so we borrowed what? A student loan. Can't pay it off because the damn student loan was 60, 70, 80,000, but you're only making 25,000 a year. How are you do the math? How are you supposed to pay that off? It was not designed for you to pay off. It was designed for you to pay interest until you die. Go get a home. Put a 30-year mortgage on it. So now you're 25, 30, you got a 30-year mortgage. You're paying that house off at 60, 65, 70. God forbid you did a refinance on that, Mom. You did a refinance on that, and now it started over. So now you're 80 years old, still paying a mortgage. It was not designed for you to get out the system. Are you understanding me?
Absolutely.
Because there's something called a finance charge. And that finance charge is an actual loan on the house or on the loan itself. And it protects the lender against the obligor's default. So if you defaulted, whether in year 1 or year 60, guess what? They still getting paid, but they also got what? All the payments you made. So the banks, the same banks, created a way to sell you a product that sold their loans at an interest rate. Genius, ain't it? Oh, Daraine, but I own my house.